Hi everybody, good week. Vladimir here with you. Welcome to my weekly preview. Last week was one of the best weeks we had, and with a few trades to talk about, give us some great opportunities. The first one was the euro against the British pound. That was our chart. I remind you right here we saw a bullish divergence. All right. We talk about that we are waiting for a bullish candle pattern. Here we got a bullish engulfing, and as I mentioned in the last week preview, the first target for this pair is the upper side of this channel that we create, and it hit it during Friday, and it was such a nice trade. The one problematic thing in this trade was that the stop loss, the original stop loss that was below the last low right here, and we got enter right here. The stop loss was around 130, 140 pips, while the first target was less than 100. The ratio is not so good, but for this of you who got the strategy I'm talking about and got a full picture, even if the stop loss bigger than the first target, we can take this direction because the divergence give us a direction for the market, and we can take an advantage and use it for our profits, for our benefits during the intraday trading. So those of you who trade intraday strategies, that was one of the best pair. Congratulations for this trade. Let the second target, sorry, work. We still have place to go up. I believe that we still can see that target. This one, just a second, right here. This target being headed in a few days, maybe a few weeks, but I believe that in a few days we can see and expect more 100, 150, maybe even 200 pips more than we already. So for this of you that who still inside, just let the 20% run, move the stop loss to break even, and enjoy this trade. The next one I was talking about was the euro against the Japanese yen. I also SMSed about this alert for those of you who registered to my new service, and this was the bullish divergence. We can see it on the histogram of the MACD and on the moving average of the MACD indicator. We, we were waiting, sorry, for a bullish candle pattern to see, and we saw it right here. We got this one. This was our entry point, and the target we can expect for is around these levels, 111.80, 111.90 plus minus. This is the four target for closing the 80%. Just take, uh, just remember that the first target must be achieved after 7 days. Why 7 days? Because the first move was 7 days. Okay, so after the candle pattern we got, we can expect the first move to be achieved maximum on 7 days. That means on this week, Thursday. Okay, if during Thursday our target is not achieved, we must close this trade manually. Something to that you must pay attention. The last move up, this one, every day, every day we saw a new high created on the chart. Every day you can see right here. Okay, 1, 2, 3, 4, 5, 6, 7 highs. Every day we saw a new high. That means that this move should be plus minus the same. Okay, that means that every day or almost every day must give us a new high. If we don't see new highs during the next days, it will be some danger, some be careful sign for us, and we will be thinking to get out of this trade. All right. So this is about the two trades we were talking about. Another one was a fantastic gold. I mentioned the divergences, the various divergences we saw on the weekly chart and on the daily chart as well, as you can see right here. Okay, as you can see right here, I was talking about the opportunity we were waiting for to break this uptrend line down. The classic the classic entry point. Oh, sorry, just a second. Okay, the classic entry point is when it breaks down this line and goes back to test it, and then bam, we are going down. But take a look. The divergence was, you see, was too much. I don't know, like a like a gum. Okay, and that means that as much as it going sideways and thus and sideways more and more, the break will be more quickly and more powerful, and that's exactly what we had this Thursday. This Thursday it was breaking down. So what can we expect right now? Is that just pay attention that this support line was broken down together with the trend line, and this is a double sign for a powerful move. And also, as you already know, my classic boundary strategy, also we saw, just take a look right here, a trend line on the RSI was breaking down as well right here. Okay, it's too well signed to go short, and I believe it's just the beginning. I believe the gold will go and reach one 1000 level in the long term. In the short terms, I believe we'll see 1150, maybe 11 figure targets. So 1100 figure targets. So for this of you still short, just leave it. You can move your stop loss to break even and then join this trade. Another two currencies I want to talk about. This is the euro dollar. Just take a look. We got a bullish move, serious bullish move. I just want you to remember that right here around 126 we have pretty much powerful resistance, and we can watch and see right here a downtrend line. Okay, that means that the euro probably will be stopped around this level, and we will see a hidden divergence created right here. Okay, and from this point we can expect for another down move. Until it happens, we are still bullish, and we can still wait. We can still look for bullish opportunities. Another sign we must pay attention for is that on the chart we can see higher highs are creating, and on the MACD we can see lower highs on the histogram. That means be careful. Signs pretty soon we will get another downtrend. Okay, so for the last, where is it? Here, right here. The last one I want to talk about is the dollar against the Canadian. Okay, a 4-hour chart. Okay, you can see that the market was stopped at this resistance lines close to 107. If we had, the meaning of these signs, if we had a stop around this level, if the market keeps going up until here, and we get some bearish candle pattern right here, we can look for a bearish divergence to be created on the moving average. We want to see another high on the moving average, on the blue moving average, another high on the histogram, and then bam, some bearish candle pattern, and this will be our signal to go short. If it is created, the first target will be right here in this level. Okay, so we can expect for some close to 100 pips plus minus, and the second target should be open, because that means that we can see and expect for serious move for more than 2, maybe 250 pips. So if this pair will create a double top, look for another top on the MACD moving average and another top on the moving in the MACD histogram, then wait for the bearish candle pattern and then short this pair. That's all for this week. I wish you a good week, profitable week. Enjoy this one, and I want to congratulate every one of you who got these trades we were talking about, the Euro GBP and the Euro Japanese yen. Good luck, everybody. Vladimir.